Pressure on markets. Welcome. You're watching India Market Close here on NDTV Profit. I'm Hersh, Sayta. With me is Agam, Vakil, and we are now 1.3% lower. Let's pull up the intraday chart on the Nifty 50. Try and get context as to how this day has really moved. It's 300 plus points lower on the Nifty. We're closer now to 24k. Do we break 24k or not? I think that's going to be the crucial point here. But the intraday chart, if we can pull that one up, quickly have a check on how things are going. There you go. We're at the low point of the day and we continue, or the weakness continues. It's been a downward sloping trend all through today, and now 24,050 in touching distance. We've in fact clocked a day's low of 24,073, so we're just about at the day's low. Let's pull up the Nifty mid cap and small cap as well, see how broader markets are essentially shaping up. 2.4 odd percent. We're obviously not at the day's low here on the Nifty mid cap, the Nifty small cap too, but there's of course clear weakness. Let's pull up the advanced decline, 3% lower on the Nifty small cap. So clearly the advanced decline strongly in favor of the declines. We're now almost 11:1 or maybe even 12:1 in terms of the ratio in favor of the declines. Very, very shallow in terms of the breadth. It's a very tough day as we see it. Earnings in focus, some stocks in focus. Let's pull up the Nifty 50 heat map, because that's where you'll see some pockets of positivity. ITC, yes, a good set of numbers, 2.5% higher, and you're seeing some of the defensives doing fairly well today. FMCG, Pharma, IT. Let's pull up the sectoral heat map as well, try and break the sectors down. And that's likely what we will see on the sectoral heat map as well. FMCG up 0.8, given up all of those gains from the day's highs, was 1.5% higher. Nifty Pharma well in the red now, 0.3%. IT more than 0.5% lower now. So clearly the breadth showing even or reflecting even here. The India VIX is up 7% now. In terms of where we are on sectors, the Nifty PSU Bank down 3%, the Nifty Metal down over 3% now, and you're seeing pressure in the broader markets on the Nifty Media as well, nearly 3% lower. The Nifty Auto is down 2.8% as well. So you're seeing some large knocks on large sectors. The Fin Nifty is down over 1% and the Bank Nifty is down now 2.2%, the Bank Nifty. There you go. So clear pressure. Let's last off pull off the BSE 500, try and see which are the top gainers and losers. Thermax, Laurus Labs on the back of numbers, Bikaji also on the back of numbers. So a numbers heavy kind of reaction coming in, at least where the positives are concerned, very evidently. The negatives too, VST, of course, IndusInd Bank down 19%. That's a standout. But Dixon Tech is one of those other earnings candidates where numbers were strong, but despite that, the reaction is 10% lower on the stock price today, Agam.
Well, fair enough, Harsh. I know there's plenty out there which is surprising for even those which are actually advancing. But, on that note, given the fact that we've seen such deep cashes in the markets, and not just today, but over the course of the week, well, let's take stock of what's going on here. We have Feroz Aziz. He's the Deputy CEO at Anand Rathi Wealth, who joins us on the show. Feroz, good afternoon. Thanks for taking the time out. This was inevitable, wasn't it, to a certain extent, after the kind of run that we've seen for the broader markets, the mid-caps and the small-cap indices specifically. But to what extent have we already now factored in, that correction, or is there more pain left?
Good afternoon, Agam. You're absolutely right. The broader market rally was quite exaggerated, point one. Point two, when there are moves which are greater than 2 or 3 sigma, then smaller triggers, smaller bad news gets amplified, or smaller good news get amplified. So that's the zone we were in, where your immunity of the market was low, if I have to call it in the medical parlance. So you're absolutely right saying that this was a little overdue, point one. Point two, the more important question, which is always the case, is what's there in store for us for the next 1 month, 10 days, 2 years, 1 year. So if you look at the barometer of this correction, if this correction, which has also been the broader market correction over the last few sessions, you would see that the Indian small cap mutual funds have still got money. Day before yesterday's number, I remember, it was 207 crores positive for equity active small cap and passive small cap, which I think is a positive integer for the last 12 consecutive days. I don't remember yesterday's number. But what if this correction would have come with an outflow in the domestic small cap? Then the interpretation of the same outcome would be very, very different. So that's one solace. Second, if you look on 27th of September is the first time after 5th of June, where the election counting day, the FII short positions went to 81.6%. And that has got unwound as of yesterday to 32%, which is a great sign. If there's a 2,000 point correction with an unwind of shorts of almost unwind of longs of almost 50%, that's a great news. So there is going to be some degree of bounce back, mathematically higher probability. Of course, things can happen as we go along, but these are some of the barometers which we track to see whether there's going to be buoyancy anywhere in the future or not.
But so far, there's always been the aspect of liquidity, funds being available to be put and allocated towards the markets, and of course, which is to a certain extent also led to such valuations and to where they are. At this point in time, do you think that those same funds are waiting by to put money in to the markets? In that case, don't you think that it won't take too long before we start seeing, those kind of levels once again, sooner than later?
Yes, Agam. Of course, we can see the levels sooner than later. I could completely concur with your inference. But see, there are two kinds of people who will consume this information. One is a trader, one is an investor. A trader takes at least 2-3 decisions a day. An investor does the same thing in a year. So the consumer of this information will decide whether this information is relevant or not. But the point I'm trying to make on this topic of liquidity is chasing stocks, one thing which I personally think everybody has to internalize more so is for every rupee of money coming into the equity market, there is an equal amount of money going out. So it is liquidity is always on the day end will tally. For example, if 83,000 crores has been redeemed by FIIs, there were equal amount of buyer as well. So on a daily basis, if you look at the NSE cash settlement, buyers and sellers in terms of amount will be equal. What decides the direction is not the liquidity, it is the price inelasticity. An FII is a very price inelastic community. If they want to sell, they will not be hell-bent on a price. A domestic institution, if you spoke to them, if they're eyeing a stock, they're very sensitive to the price. ये stock मैं 200 में खरीदूंगा, 205 में भी नहीं खरीदूंगा. FII ये नहीं देखता. FII बोलता है कि ये stock खरीदना है, 205 में मिले बहुत बढ़िया, 250 में मिले बहुत बढ़िया. So what determines the market direction is not the amount which is chasing, but it is about the price elasticity of the community who has deep pockets at that point in time.
Right, Feroz. Hersh also joining in. Good afternoon. Feroz, so therefore, do you still expect outflows from an FII perspective?
Yes, Hersh, so nice to talk to you again. It's always an honor. Coming to the pointed question, do I see corrections? If I look at some degree of data patterns of how FIIs behave, they behave very predictably. What they do is, when they sell one day, let's assume on the 2nd or the 3rd of October, I don't remember the precise date, of course, 2nd November was a holiday. One of these early days of October, one day they sold 14,000 crores. It is not going to be a purchase the next day. The next day was a sale of 10,000 crores. Then the subsequent day, the sale of 6,000 crores. So you can actually practically predict what quantum of sale will come from an FII tomorrow, right? So if you look at the last 3 days, you will see 7,000, 3,000 crores, 4,000 crores and 2,000 crores. So it implies that the selling is reducing. The purchase day is somewhere ahead. So to answer your pointed question, do I expect further selling? The answer is yes. And one thing which I'm highlighting to the viewers, FIIs are not as sporadic as we may want to believe. When they sell 100 rupees on a particular day, be rest assured next day they will sell 70 at least. It will not be minus 100 to plus 100 the next day unless there's some real dramatic news like Chinese God if they're unkind. That's a different story. I'm speaking on a normal day.
Sure. And Feroz, what about a more macro level question? Do you believe that there's a bit of a slowdown where growth is concerned? Do you feel that certain companies and certain sectors are feeling, or rather a majority of the companies and a majority of sectors are feeling margin pressure, especially where SMID companies are concerned? Is that a trend which you believe is going to get worse in H2? Is that something you're looking at, or you're trying to, if one were to understand your views on this?
Yes, Harsh. In this, again, unfortunately, I'm an animal of data, so I have to give you some data. Every time we want to see what this quarter is going to be like, if there has been an upgrade or earnings the same quarter last year, the chance that you will get a downgrade this quarter, this year, is very high. Now, if you look at last year, now as we speak, in the second quarter of FY25, 15 companies of Nifty have already given results, which is 44.4% weight. The EPS growth of the same 44% of those weights was 111 rupees last year. This year, as of now, it is 116.9, which implies only a growth of 5.3%. If you see the 111 earnings last year, same quarter, there was an earnings upgrade. So that's why you see only a 5.3% growth. So to answer your pointed question, Harsh, I personally believe because the second half of last year we had earnings upgrade, and the earnings of Nifty for the full year last year ended at 1048, our estimate for that number was 970. So we went wrong. And we went wrong on the higher side. So nobody questions you so much when you go wrong and underpredict. People didn't. But I would like to acknowledge that 970 was my earning estimate for Nifty, and it turned out to be 1048. So that implies that earnings could be slow second half, and markets, when they are with low immunity, such small bad news actually create market correction. So to answer your pointed question, there could be some degree of consolidation, especially in the broader market for the next couple of months.
Okay, Feroz, we'll let you go on that one. Thank you so much for all of that perspective. And it's always good speaking with you. Thanks for coming in. Now, let me bring on board Mr. Satya N. Gupta, who's the ex-principal advisor at TRI, just to try and break down some of those numbers that came today. You're seeing reactions on stock prices, of course. Let's pull up something like a Vodafone Idea. Let's also look at Bharti Airtel. Some loss of customer base across the board for the big three at least, and at the expense of, BSNL. And therefore, just to try and break down as to how that data is reflecting and why is it reflecting so. Mr. Gupta, I want to understand from you, what's your take with regard to the data which came out today?
Oh, yes, this data actually is, of course, a surprise, but this is happening for last 3-4 months, actually. And there are reasons for that, actually. Reasons for subscriber numbers of Jio, Vodafone or Airtel decreasing, and those of BSNL increasing. But it is not the zero-sum game. It is not that if 10 lakh subscriber of private telco have decreased, the 10 lakh here have increased. So there is no correlationship between them, but there are reasons, and reasons start with the tariff hike by the private telcos, which happened 3-4 months back, where BSNL decided not to increase their plans and their tariffs. That was the first reason that private subscribers started losing out the customer instead of net addition, and BSNL starting getting the net additions. That was one thing. But that was just a start. In last 2 months, actually, the DOT portal called Chaksu, the Chaksu where any aggrieved customer can actually indicate the numbers from where he's getting what is called unsolicited calls or some spam calls or fraud calls, and then that DOT investigate that and find out, yeah, these are the numbers which are basically can be dangerous or can be unsolicited. So then they issue the instructions to these telcos that these number and sometimes a full series of numbers have to be disconnected. And because of that, private operators are losing out. And then there is a KYC issues in many cases. government have become very strict now on KYC. If there is a faulty KYC done by any operator, they instruct him to actually disconnect those numbers. Then these multiple SIM issues were there actually. With one Aadhaar, if more than 3 SIMs are there, then the government issues the instructions to operators that you have to disconnect or find out the reason why so many SIMs are taken by one subscriber, and they have to be reduced to the permitted level. So these are some of the reasons that this trend has come, and it is not stopping. Actually, it is increasing day by day. So this is what, according to me, is the reason for this kind of, you can say, situation.
A lot of insights in that very answer that you've given us in explaining as to why some of your private players are losing out on customers and BSNL is gaining one. But at some point in time, Mr. Gupta, I'm assuming that even BSNL will have to increase its tariffs. And secondly, sir, a lot of the aspects that you spoke about with respect to the reasons why some of your private players are losing out customers is perhaps a one-off, and eventually once those issues get solved, maybe just, and this is again in the realm of conjecture, you may not see, once those issues are resolved, you may not see that much of a loss when it comes to some of your private players. So how are you taking this? What can we expect going forward now that we have some of these aspects already play out?
Yeah, you are right. Actually, if these aspects are taken care of, that means the security issues, KYC, multiple SIM issues are sorted out, then the only reason, and that is the tariff again, because the private operators are planning to increase the tariff again, because they have decided they'll be do it in phases. They will not do in one step, actually, every 3 months, something like that. And BSNL, I was listening to their new chairman, they are on record that whatever happens, they will never increase the tariff. So they look to be very determined that they will not increase their tariff. So that reason will always stay, because private operators are forced to increase the tariff because they were doing it at a loss as per their own admissions, and whereas BSNL is on record that they will not increase the tariff. So this region will always basically maintain this trend, a reversal of the trend where private sector was earlier increasing, BSNL decreasing. Now it is reversal, and this, I think, according to me, will still continue for some more time to come.
Thank you so much for taking the time out and speaking to us, telling us about all the trends, and of course giving us a little bit more insight as to why and how these trends are playing out, could potentially play out as well. Thank you so much for that. But we shift focus to the markets, which of course are not looking good. We thought, and we probably were expecting, hopeful that it would be a bout of short covering, but that hasn't come through. In fact, we've seen further selling, and the selling is not just in the broader markets, which has been the theme throughout the course of the week, but today is also a day when benchmarks are wilting under considerable amount of pressure. So the Nifty is down 1%, the small cap index is down 2.5%, the mid cap index is down 2%. There is just no relent. Well, on that note, let's get in a handful of technical opinions going. First up, we have Kunal Rambia. He's the founder at The Street, who joins us now. Kunal, good afternoon. Thanks for joining in. Maybe we'll start by taking stock of the Nifty 50 itself, Kunal. How are things looking to you?
Hi, Agam. Thanks for having me on the show. It's always a pleasure discussing markets with NDTV. So if you look at the Nifty, I was just listening to the previous conversation. I think Nifty is right now near to that level from where it started the rally, somewhere on 13th of August. It's down by 8.5% from the high, but I think this 24,150 is the perfect level to go long. And from here, the risk-reward ratio for the long is very favorable. So the first counter which I like the most at this point in time is Reliance. Now, Reliance is after, consolidating near the low. I think it's making a good base formation near to 2660. So with the stop loss of 2650 on a closing basis, one can initiate a buy, and the targets can be 2850. That's the first counter. And the second, I think, is SBI. I think this counter is again the trending counter available right near to the support. So with the stop loss of 770 on a closing basis, one can initiate a buy and the targets can be 825. These two are the counters to watch out for next 10 to 15 days at least.
Right. And Kunal, let me ask you your views on Bank Nifty. Constructive on the Nifty, you expect a bounce back from here. So Bank Nifty.
So, hi Hersh. Again, if you look at the trend on the Bank Nifty front, right from the low of October 23 so far, it's absolutely trending. And in fact, it has not even broken the previous bottom, which we saw on 7th October. Precisely that bottom was 50,200. And right now, today, we made a low of 50,385. So I'm very bullish on Bank Nifty again. So with the stop of around 50,200, one can initiate a buy even on Bank Nifty index. I think this correction is still not the beginning of a downtrend. It's a sideways consolidating market. So one can go long on this. The targets can be 51,500 to 52,000 in the time to come.
All right, that's a view on the Nifty and the Bank Nifty. We also now have Neeraj Diwan, independent market expert, joining us on the show right now. Neeraj, a lot has happened, and it does seem like now there's a little bit of a secular correction in the markets, and the broader markets have certainly corrected. Neeraj, I reckon at this point in time, everyone would be interested about potential opportunities on everyone's radar. So what are you keeping your eyes on when it comes to, well, some ideas that you may have been thinking about of late?
Yeah, good afternoon. Definitely, we're seeing a decent correction in the market. Until now, it's more or less looking like a correction only because last year also, if you compare this to September, October, the mid-cap index has fallen almost in line with what it fell last time, about 10% kind of a correction we saw at that time. And even Nifty, we saw maybe 7%. This time it's 8.5%. I think because this is China impact also, which is playing, in our markets. So, so this correction definitely is giving you opportunities. So whether it's, some of the stocks which have really got beaten down, whether in the real estate sector or even in the banking space, then even in the mid-cap IT where we saw some decent results there, you don't see that kind of a correction happening, but there are still opportunities there. And some of the, even hospitality stocks, so you have across their opportunities. So there is a couple of FMC names which have corrected because of bad results. Like last time, you'd asked me about Hindustan Lever, it was about 3,000 odd. So that time I was not too keen. But I think if Hindustan Lever is correcting a bit more around these levels, some FMCG stocks can also be looked at, whether it's levers or whether it's ITC. So these kind of stocks will have low beta, and they have corrected also from the high. So there are opportunities across. So, but one need to be really very careful in where they're investing money. I think more and more focus should be right now on large cap stock. And once mid caps and small caps stabilize, then you can think of opportunities there.
I want to quickly mark out numbers which have just flashed. Poonawalla FinCorp, let's pull up the stock as well. And I want to highlight the numbers because just amazingly important to understand how this is shaping up. 14% lower on Poonawalla. Interest income, mind you, at 911 crore rupees. Total revenue from operations at 989 crore rupees. And an impairment loss this quarter of 910 crore rupees. It's going to be really interesting to understand what exactly has gone in. But imagine total income of the quarter is equivalent to the entire impairment taken in a single quarter. I mean, this is really not looking good for lenders. The loss after tax, or rather post tax, is 470 crore rupees. From this quarter on an income of 980 crore rupees. Not looking good, 14.5% lower. Let's pull up an IndusInd Bank as well in the same breath. Because just if I were to compare the numbers, and maybe not a comparable, but I'll try to, IndusInd Bank's provisioning this quarter was roughly 1900 crore. HDFC Bank's provisioning this quarter was 2700 crore. IndusInd Bank's book is 4 lakh crore roughly. HDFC Bank's books is 6 times the size and just 1.5x in terms of provisioning. Goes on to show that currently everything has moved towards asset quality. And look at the knock on the stock for IndusInd as well, 18 to 19% lower, Agam.
Yeah.
And it's clearly men versus boys at this point.
Yeah.
And it's clearly visible. Neeraj, let me bring you in on this one. Of course, Poonawalla, the most recent case in point, it's just come out in terms of numbers. But just talk us through your views with regard to financials, because this is a big shift versus last quarter.
Yes, definitely. The retail, stress which was being talked about, the small finance, the MFI stress, I think it is visible in some of these numbers. I think then, if as far as financials are concerned, one needs to focus only on the large cap, stocks like maybe HDFC Bank, or maybe something like a State Bank. So there, one can still, take positions, but, the smaller ones, and where there is a lot of, small finance kind of exposure, where there is a lot of MFI exposure, retail loans are there, unsecured loans are there. I think there one needs to be little careful and see how it pans out over this quarter, and should not be in a hurry to just buy because stocks have corrected.
Well, let's also take stock of some of these banking names. Maybe we can just take stock of the bank Nifty specifically. And Kunal, I know that at the risk of repeating, the bank Nifty too is taking quite a bit of a knock. And I want you to come in on the levels that you can watch out for as far as this specific index is concerned. How would you go about this?
So Agam, as we just discussed, I think the Bank Nifty is near to the support itself. So with the day's low that is at around on the futures front, that's at 50,385. I think that's a good strong support. So considering that itself, one can initiate a buy. Though now it's a weekend, so over the weekend, if someone wants to avoid taking the position, it's absolutely fine. But I think this support will be taken care of, and the levels to watch out for the momentum breakout will be 50,800. Above that, we can expect the levels of 51,250 to 51,300 in the immediate time.
Well, on that note, we slip into a short break, and on the other side, we continue to get you all the conversation around current markets. Back in just a bit. Stay tuned in.
Welcome back. Thanks for staying with us on India Market Close. Let me bring up L&T among the heavyweights, down 3.5%. We had a UBS note coming through this morning. They've reduced the target price on L&T quite sharply from 4,400 to 4,000. Now, I know there's still a healthy upside from here, but that sharp target price shrink not giving any comfort. Anushi here to try and break down as to why that is so.
Hey Harsh, so if you look at the UBS note that is there, you've mentioned that the target price has been trimmed from 4,330 levels to about 4,000, which is itself a cut of about 9%, but the implied upside still remains at the level of 16%. While they've they've downgraded the stock rating to neutral versus the buy call earlier, which was given, and this is one of the main reasons for this, that we're looking at the pace of order inflows that we should be looking at for the company going forward. So while if we look at the company's revenues and the order book growth, so their order inflows have been growing in the range of 12 to 15%. How this would go ahead remains as a key watch out for. UBS has stated, believes focus now remains on execution part over orders, because now order intake is not as easy as it seemed earlier. Other than that, managing returns and cash flow remains as a key to monitor the company's performance, as the appetite to grow orders has comparatively gone down. Pertaining to this, they were like forecasted a order intake growth of about 6% now, as compared to 10% earlier that they had estimated between FY24 to 27. However, on the upside, though, they still believe that because of the company's earnings, which remains on a stronger standpoint, we do notice that, in the last few quarters, that the margins have been more or less in a similar range. This was because of the high legacy orders that were there, which led to the margin profile being stagnant over here. We have to see how the execution of the new orders would lead to the margin profile going forward for the business. And UBS believes that the stock price might not weaken as sharply, given the earnings resilience remains on the stronger side. So order intake growth is the key focal point for L&T, and why they have downgraded the stock to a neutral rating versus a buy call earlier.
All right. Well, Anushi, thank you so much for getting us those details on what UBS has to say about L&T. Kunal, coming back to you, we'd be hard-pressed to find a lot of counters which is showing any gains at all. But, L&T is not unlike what we've seen for the rest of the other counters. It was on a downtrend. It is once again looking at a knock around 3%. Firstly, your view on L&T. And, you already spoke about a potential up move for Reliance, but are there any other, Nifty 50 or large cap counters which could also potentially show a little bit of reversion to mean?
Absolutely. So, Agam, the first counter is L&T itself. The reason being, on 4th of December, we saw the massive gap up open on this counter, and it was up by around 4%, and that day's low was 32.50. We saw the same level coming again on 14th Feb, and then again on 13th May, on 6th June, and again we are reaching back to the same level, 32.50, 3300 level. I think this is the perfect zone which the counter has created. On the lower side, it's 32.50. On the higher side is 37.50. It's a range-bound trade which is offering fourth time opportunity. I'm extremely comfortable because the trend is positive. Right now, it's sideways consolidating. So one can think of initiating buy near the mentioned support of 32.50. Keep the chaos aside, I would rather say, because we focus mainly on the price action. So I'm comfortable buying at this level. And the another counter, as you just mentioned, is ICICI. I'm very comfortable buying ICICI at the present level. It has rightly bounced from the support level of last 4 years trend line support. So with the stop loss of 12.30, one can initiate a buy. The target can be 12.85 to 12.90. Let the trend continue. We keep trailing the stop loss.
Kunal, a quick question. What do you do with something like an IndusInd Bank, down 19%?
See, Hersh, again, on the IndusInd Bank front, if I look at the historical data, we had the similar bottom on 3rd April itself, and that was 1013. And before that, we had the same level on 9th May 2022, which was again 1030. In this panic, obviously, I would not really advise to buy this correction because it's a sharp correction. But by any chance, if the counter manages to hold 1030 mark for a day or two and consolidates near this level, I think then with the stop loss of 1000, one can definitely look at this counter from long side.
Okay, Neeraj, we have you back with us. Want your view on Dixon Technologies as well. I know that a 10% correction is not enough. considering the kind of valuations it was trading at, even at life highs. In fact, interestingly, it did in fact make a new life high this morning before correcting. That said, the kind of numbers that we've seen in Dixon Technologies are something that you can't really ignore. We've seen a manifold jump in profitability as well as revenue. So some might argue that these valuations are perhaps justified. Your own opinion here?
I would like to talk about the whole space, like the EMS space, whether it's Dixon, whether it's PG Electroplast, Amber Enterprises, EPAC Durables is another one which is getting good, tie-ups done. This space, you will see this kind of growth coming in. So if you see 2-3 years, 4 years growth, then these numbers don't look that expensive. Though definitely it's expensive looking at current year, next year. But when you extrapolate the numbers to 3, 4, 5 years, then there's still an opportunity there on dips, on corrections. One can add on to these stocks. Dixon definitely is expensive. I'm not saying one should jump onto this, just because it's corrected a bit today. But the space as such definitely looks, that one should be looking at buying this space on correction, because the next 4-5 years looks to be very good for this.
In fact, we did speak to the CFO of the company, Saurabh Gupta, who actually elaborated on many things and said that this will only get better for Dixon Technologies going forward after the kind of stellar numbers they have shown. Listen into what he's saying.
It will only get better from here because one of the customer additions we start manufacturing from November onwards, and we are looking for even a large brand which would hopefully happen in the next couple of quarters. So by next financial year, yes, the volumes can be potentially even better because some of the brands that we just started in this financial year would also get ramped up and would also have full year numbers for next year. Yeah, and then our piece on the backward integration, where we have tied up with HKC, which is the largest global company on the open cell and display manufacturing. That number should start coming in from the next half of the financial year, H2 of the financial year. And that would really add a lot of competitive strength more to our business, add to our margins, because all this backward integration play, whether it's display and then our future strategy on precision components, mechanicals, die cuts, would significantly boost our margins in mobile, which is the largest play. So one, you will have the revenue growing, and then on top of it, the margin expansion can potentially happen in that category.
Okay, so that's on Dixon Tech stock, obviously under pressure. But let's try and pull up the Nifty FMCG index for today in terms of intraday, because that's the one pocket of or some sort of safe haven of sorts within markets today at least. So Nifty FMCG up around 0.8%, off the highs for sure, visibly. But let's also pull up what the Nifty FMCG has done in terms of its 52-week highs and how it's come off those highs and therefore likely justifying a bounce back now. There you go. So that's how the 12 months have played out. So significant pullback from the highs of 65,000 plus. It's now sitting at nearly 59,000. So over a 10, 11%, 12% correction. Neeraj, if I can come to you on this one, the numbers don't look particularly constructive, at least at this point. Margins under pressure with raw material prices under pressure, the elevated palm oil prices as well as duties don't help. And you're also seeing demand being slightly on the sluggish side, at least where volumes is concerned. Nifty FMCG, when does it start looking attractive to you, or are these levels where you would start looking at this particular pocket?
I think one can be selective there. Whether, like I mentioned earlier also, like Hindustan Lever had gone up from 20 to 2300 to 3000, 3100 in 2-3 months. So, there was no point chasing it at those levels. But now that it's correcting, it's coming closer to the 2400 levels. I think that is the kind of level I would look at in the Hindustan Lever. Though I know the numbers were not that great. There was a problem in the volume growth. But I think those are temporary and they will correct over next 1 or 2 quarters. So, but I think the opportunities can be encashed and they can be bought into now. And second one would be ITC, where, even the demerger of hotels are going to happen. So I think that stock also was seeing higher of 520, 530, those kind of levels. It corrected, and from those levels, it's made a base. It's doing well again from the correction it saw recently. I think even ITC can be looked at these levels. So in FMCG also, one needs to be selective and look at opportunities on dips, can accumulate these stocks.
Well, we've spoken about two of the key themes today, and one of them is FMCG, and the other one is, of course, finance. Perhaps we can actually take stock of two counters, BPCL and HPCL. OMCs have also been moving around quite a bit. Today was a day where both of them have come up with the earnings. HPCL is taking quite a much sharper knock right now, and it's down by around 8.2%. It was already down. It was down around 5% when it came with its earnings, and after that we've seen a further sell-off coming through. Neeraj, any word on these oil marketing companies?
The only risk there is that, there will be some cut happening as far as oil prices are concerned. It may not happen now, may happen after the state elections are over. But, if they're correcting like this, crude also correcting, maybe some more down from these levels, they are attractive because some of them, like IOC, has good dividend yield also. And, I think I'll be looking at IOC and even HPCL if they correct a little bit more from these levels.
Okay. Let me come back to you, Kunal. Some stocks which are buzzing in trade, something like a Godrej Consumer, again, has been doing well since the morning. If you can also give us your views on ITC. So some couple of stocks in the FMCG pack.
See, actually, Godrej Consumer Hersh is actually not doing much, but yeah, it has bounced from the support level. The previous breakout was 1280. This counter actually went below 1280, and that was the trap yesterday. Today, gap of open is giving comfort that it's holding 1280. So if someone is a positional trader, then definitely with the stop of 1250, one can think of buying this counter. It's a very slow and steady mover counter. So momentum trader should avoid this. But yeah, if a trend follower guy is willing to add on, then yes, that can be added with the stop loss of 1250. If I come to ITC as a stock, see, today, just ignoring today's behavior, we have the support placed at around 480, counter went up to 493 and back to 480. We'll wait for a day. This first higher bottom is created, higher top is created. We want one more higher bottom. So let's wait for Monday. If there is a follow through buying, then with the stop of 470, one can initiate a buy.
Okay, well, there you have it. Moving on, let's also take a look at Bikaji Foods, one of the few counters which are actually advancing by 4% right now on the back of earnings, rightly so, strong earnings coming through. Let's listen in to what the CFO of the company, Rishabh Jain, has to say about the business to come through. Listen in.
So we are taking very proactive step in passing on the prices, as well as we also run a cost saving program internally in the company. So both things work well for us, and largely we're seeing price escalation in few pulses as well as in edible oil also, where government has increased 20% duty in palm oil. So that's how it has impacted us. But yeah, overall we have been very hands-on in passing on the prices. And of course it is impacted in some way because our target was higher compared to what we're doing as of now. But yeah, overall it's compared to other competitors, it's doing good for us.
Okay, that's the management of Bikaji Foods. The stock obviously flying away in trade today, doing fairly well for itself. Kunal, let me come to you with regard to, again, maybe a couple of counters which are buzzing in trade. One of them is something like a Glenmark Life, down 10%. I believe it's on lower circuit, but even a VST Industries for that count, 9.5% lower. Kunal, I know numbers obviously dominating some of these names, but just on technicals on charts, your sense?
See, Hersh, again, on the VSC Industries, we are back to the levels which we saw somewhere in November 23. The counter was near to 295, 300, went up to 485, 500 kind of levels and back to 310. So on the weekly chart, this correction is looking very, very sharp compared to the advance. It took a longer time to reach those levels, and in the decline, it's just been 5 to 6 weeks. The counter is back to that level. But if you look at the levels, they are still intact. So 290, 295 is a level to watch out for. Again, if the counter consolidates near this 300 to 310, then with the stop of 290, one can definitely think of initiating a buy. I would avoid this counter because the trend is showing extreme volatility, but trend is intact.
All right. Well, on that note, we get in Varsha to talk to us about Glenmark Life specifically, which is under pressure. It's locked in a lower circuit of 10% for now. Varsha, over to you.
Well, thanks Agam for that. So if you see a kind of weak set of numbers, now their generic APIs revenue decreased almost 13% year on year, and the weak set of numbers that we are seeing is on the back of temporary closure of Ankleshwar facility, which actually affected their quarterly revenue. The production loss from that has largely been recovered according to the company. H2 FY25 is expected to perform better than previous estimates as per the company, and they are continuing to benefit from rising demand in key markets such as Europe and the US. And the overall growth of FY25 is projected to be in high single digits. Now, why the pressure? The other reason for that we are seeing a pressure in the stock is the management commentary in con call. So they've revised their guidance from low teens growth to high single digit growth for FY25 with stable EBITDA margin. Now, the revision is on the back of notable slowdown in Argentina due to destocking, which is impacting actually Latin America performance and which is reflected into their order book. The production impact that I was speaking about, some production loss was recovered in Q2, remaining is to be expected to be recovered in H2. They are anticipating multiple launches in FY25 and 26, which is expected to drive growth for them. The demand remains stable except in Argentina, and they are actually bullish for H2 FY25 on the back of CDMO projects. They're expecting 2 CDMO projects generating almost $12 million in revenue, and they have planned capex of around 300 to 350 crore. Note that the capex was expected at 350 crore. They have revised, they've rather reduced the capex at almost between 300 to 350 crores. Now, to have that single digit growth, they have to do more than 20% growth in H2. They say that they'll be doing it on the back of CDMO projects and some new launches. But the commentary, the revision in guidance that we are seeing is maybe this is the reason that we are seeing pressure in the stock.
Okay, some of these pharma names really moving on the back of management commentary coming through. And let's pull up something like a Laurus Labs as well. Miss on earnings, but founder and CEO Satyanarayan Chava spoke to us today, and he was talking to us about the significant growth that he's expecting in H2 of FY25. Stock is up 4%. Listen into that conversation.
No, these numbers are in line with what we thought at the beginning of this financial year. And we're always guiding our investors, all the stakeholders, that FY25, the first half is we don't expect growth, but the second half we expect significant growth. In the Q2, as you have mentioned, the CDMO segment witnessed significant growth, but in Q3, Q4 onwards, other areas also will definitely help us to grow. Yeah. See, as we have mentioned, our API forte is in ARV and oncology, and select APIs in other therapy segments. We have identified a few therapy areas to excel, like oncology and ARV, and you will only see those giving results in FY27, not in FY26 also.
Right, Neeraj, plenty has been said about the pharma space, and we've seen mixed moves here, but anything that stands out for you in terms of an opportunity?
I think as far as concerned, we saw a decent rally in the last 2-3 months. So though, some stocks here and there may have corrected, but I don't think it's warranting any fresh investment. At best, they can be defensive. If you look at a stock like maybe Sun Pharma or a DV's Lab, they can be defensive bets at these levels and can give you, maybe a 10-15 return kind of a return from these levels. But I think, but there's no case of really buying it for a good return or a market outperform a return over the next 1 year.
All right. That's as far as the pharma space is concerned. Kunal, we have not more than a few minutes left for closing. So anything that stands out for you in terms of buy today, sell tomorrow?
Yeah, I'm not very sure about buy today, sell tomorrow, but yeah, the counter which are available near support and looking good as of now. The first among them is Tata Power. Counter is available right onto the support and it's showing good reversal sign even on the lower time frame chart. So with the stop of I think 410, one can initiate a buy. And the targets can be 435, 440 in probably a very short period of time. If that happens, again, a request to our viewer is to keep trailing the stop loss rather than booking the profits. And the second is REC, which is looking very attractive after this steady correction. Counter is again near to the support itself. So with the stop loss of 495, one can initiate a buy. The first target can be 525 followed by 545 kind of levels. So both are short-term as well as mid-term counters, which one our viewers can keep watch on.
Okay, so perfect. Those are STBT, BTST ideas. But ICICI Bank will declare numbers tomorrow. Of course, financials are in a crucial spot because asset quality is under pressure. But ICICI expected to deliver a fairly steady set. We're expecting to see net interest income around the 20,000 odd crore mark, which is a slight uptick when you're looking at it sequentially. Operating profit expected around 16,000 crore, absolutely flat sequentially. Provisions expected to inch up slightly to around the 1450 to 1500 crore kind of number. And profit after tax expected to be around the 11,000 crore number. On a sequential basis, a largely steady set expected across the board. Growth on both sides of the balance sheet, advances as well as deposits, expected to be around the 4% threshold. So healthy growth continues is at least the hope and the expectation. In terms of monitorables, well, margins largely expected to hold. Any slip up there will, start to possibly, analysts will start to look at management commentary in that regard. Deposit growth expected to be in line with credit growth. Asset quality is going to be a key monitorable, especially in the SME portfolio as well as in the unsecured credit card portfolio. And you're going to see whether ROAs can hold up. ICICI Bank has quarter after quarter delivered very strong ROAs. It's been one of those banks which has been extremely steady. Can it continue to do so, Neeraj, in your viewpoint?
I think looking at what ICICI Bank has done over the past, I think this quarter also can be a good quarter. But then, we've seen these kind of surprises coming from financials. So better to wait for the results and then take a call from these levels. Though and looking at the book and looking at the last quarter, I'm not really expecting anything, negative coming there. But still, I would rather buy to take fresh positions from these levels.
All right. Neeraj, it just so happens that Monday is going to be the day where Reliance Industries goes ex-bonus. Even notwithstanding there, your own opinion how you would approach Reliance Industries?
I think any dip from these levels, even now also Reliance can be accumulated for someone who's looking at least 1 year, 1.5 years. But I think if any dip happens because of ex-bonus also, suppose the adjusted prices below half of this price, I think then also one can look at buying it, even.
Neeraj on a patchy line. Okay. But a couple of other big movers in trade. You have something like a Kirloskar Pneumatic on the back of numbers up 12.5%. You're also seeing JNK Bank 3.5% higher on the back of strong numbers. JSW Steel is down 1.3 odd percent thereabouts. There you go. That spike on JNK Bank very evident. Now, Kunal, if one were to look at within financials, what would be your key pick? Give us 2 or 3 because this is where the correction has been a tough one.
So, Hersh, if we look at the mid-cap banks and the small banks, the first definitely is Jammu and Kashmir Bank because it has exactly bounced from the lows of October and November 2023, which was 95.96. So yeah, that can be a good play from here. The second, which I like the most, is IOB, Indian Overseas Bank. the biggest rally on this counter started somewhere in January 24. From 48, it went up to as high as 80. And today, in today's trade, it has made the low near to that level itself, which is 48.5, 49. So these are the two counters which are actually looking good from risk reward point of view. Just momentum is missing, but it's not even breaking the support. We saw the momentum in the first bank, but in IOB that's missing. But I think this is a good level to accumulate from mid to positional point of view. And the third one is Bank of Maharashtra. I mean, that's again is looking very attractive. It's near to the support itself. So with the stop of 47, one can look at Bank of Maharashtra also.
All right. Well, on that note, Kunal, Neeraj, thanking you both for joining us and giving us your views on the markets, which certainly are proving to be very, very challenging for everyone who's interested in buying into them. But we're here's hoping that the Diwali week brings some cheer back into the markets, and we have for now seen a near-term bottom. But at least as far as today is concerned, the selling hasn't abated. There was hope that there'd be a session of short covering that hasn't really come to be. The Nifty is coming off by around 0.8%. For the Bank Nifty, it's also down by around 1.3%, so a deeper gash there. All in all, when it comes to your markets and the constituents of the Nifty specifically, there is more to lose than gain, with likes of IndusInd Bank, L&T and M&M weighing down on the indices along with Reliance Industries. But let's take a look at the heat map of the Nifty specifically and see how things are faring. We have barely any gainers, if at all. And, say for something like an ITC or an Axis Bank, and along with something like BEL, we don't have too much to go for. On the other hand, IndusInd taking a knock of 19%. BPCL down 5.3%. Adani Enterprises, Shriram Finance, M&M, all of them are down by around nearly 4% in trade today. So not a very encouraging day of trade in general. And all in all, that's what we're keeping an eye on. Very quickly, before I get Hersh in, let's take a look at the advanced decline ratio for the NSE specifically, and you'll notice it's not a good one at all. 1 gainer for 6 losers. Though this is a slightly better advanced decline ratio as compared to what we saw earlier on in the morning, but it's still not a very encouraging one. But Hersh, come in and tell us about what you're looking at when it comes to the broader markets.
Yeah, absolutely. Let's pull those up because we've seen a bit of a recovery. Let's pull up the intraday on both the Nifty mid cap as well as the small cap. So a bit of buying coming in right towards the fag end of the week, and that's likely some positivity coming through. If you can see how we've just minor recovery, 0.5% thereabouts across indices, which is likely the positive, I think, that I would take away, at least after the kind of day we've had today, Agam. But that's what I would view. And let's also look at the sectors, actually. Let's look at the heat map with regard to sectors. There you go. FMCG up nearly 1% at close now. We've closed for the day as well as for the week. Nifty Pharma absolutely flat, slight negative bias on the IT index as well. Not too bad on either of those three. But let's look at the bottom, because the PSU banks beaten 2%. Nifty Metal seeing a gash of around 2.5% along with oil and gas, and Nifty Auto down 2% plus. That's where a bulk of the pain is. And in the Nifty 50 counters, the Nifty Bank is down 1.3%. That's where a bulk of, again, the pain seems to be especially trickling on to the Nifty 50 as well as the Sensex. But of course, we've closed this week. We've somehow survived it. Let's pull up the weekly chart as well. There you go, 2% down for the week on the Nifty 50. Are people gonna buy this dip? Well, we'll have to wait and watch for Monday. But 5% gash on the Nifty mid cap and 6% on the Nifty small cap. This is where the real pain lies, and whether people are gonna buy this or not is a question, I believe, for Monday, Agam.
Yeah, Hersh, that's what I've been mentioning. We're moving into the Diwali week. There's a lot of hope that for now the markets have bottomed up. Maybe some Diwali buying can bring some festive cheer back into the markets. And it's not like earnings have been terrible. Sure, there have been some very, very big misses, and well, the stocks are reacting to that. But again, hope is it's a dangerous word in these markets, but you can't not hope for things to improve. Well, on that note, it's a wrap on this edition of India Market Close. It's goodbye from Harshmi and everyone who put this show together. We'll be back next week, but until then, keep watching NDTV Profit.